All right, the debate over whether public companies should issue quarterly results is back. This topic reignited by a recent Truth Social post from President Trump, who says that a change to reporting to every 6 months instead of every 3 months would let managers better focus on running their businesses. The SEC says that it will prioritize the president's proposal, which he first pushed during his first term back in 2018. The topic was addressed in an op-ed around that same time by Warren Buffett and J.P. Morgan CEO Jamie Dimon, who said that short-termism is harming the economy. Joining us right now with more on this is Robert Greifeld. He's former Nasdaq chairman and CEO and Cornerstone Investment Capital co-founder and managing partner. Bob, I want to just clarify first. Jamie Dimon and Warren Buffett wrote an op-ed back in 2018 where they said this short-termism was harming things, that CEOs should be able to focus on long-term more quickly. But they were advocating for no longer giving earnings per share guidance. They thought companies got trapped into these things and then were forced to, meet those numbers at any and all cost. I do want to point out part of that op-ed said, our views on quarterly earnings forecasts should not be misconstrued as opposition to quarterly and annual reporting. Transparency about financial and operating results is an essential aspect of U.S. public markets, and we support being open with shareholders about actual financial and operational metrics. Your views, Robert, they go on to say U.S. public companies will continue to provide annual and quarterly reporting, blah, blah, blah. Your views on this, Robert, just in terms of what companies should be doing, what you think of the president's proposal?
So, one, I think it's a very legitimate discussion and argument. So on one side, investors want more information, and to the investors, the information is apparently free and frictionless, right? They just get it, they can use it. Other people say they use it for short-termism, but it's there, they typically want it. Companies on the other side kind of want less, in that it takes time and effort. And it's not just the time, but it's the opportunity cost, because senior management, meaning the corporate CFO and CEO, frequently have to be involved with dealing with investors when they have quarterly earnings releases. So what's interesting to me is that in this situation, the president is not really an outlier, and that the vast majority, I think with the exception of Germany and Austria, have gone to 6-month reporting. And they did it because they thought investors were too focused on the short term, not so much on the burden associated with the companies of doing the quarterly reporting. So it's been out there. We're kind of in a different place than most of the world. I would say this: if I was to come up with a recommendation, I would do the following. I would support going to reporting every 6 months, but in the off quarters, I would have management provide a report to shareholders inclusive of their internal KPIs. And in certain ways,
what's an internal KPI?
Key performance indicators. How are they judging, right, how they're doing? And when you think about it, every management team has reporting that's daily, weekly, monthly, quarterly. It exists, right? But it's not in a GAAP compliant format. So we're saying in the off quarters, you don't have to do a GAAP compliant report, but we'd like to see something from you, and we'd like to really, in a certain way, get more inside what you're doing. Let us see what you self-describe as your key performance indicators. Do that every 6 months. And I think that would be a way, the way I look at it, you take away 90% of the effort for the quarter for the companies in those off quarters, and you give investors 90+% of the benefit. So it's a win-win, and I think that's a great and sensible approach. The other point I want to make is when we talk about the public markets and reporting, it is a refinement, right? The public markets work, and they work well. I checked the price from when Jamie and Warren wrote that letter. The markets have more than doubled. They're working. The bigger issue to me is reporting in private markets. Now, Becky, I know you and Andrew.
That I would agree with. And the idea that most of these companies can stay private for so much longer, there's so much money there, there's not an incentive to go public.
None whatsoever. So you have a big momentum and pressure and desire for private investors, for retail investors to get into these private companies. We're not going to stop that.
And there's not disclosure on the same level that there is on a public company on those. Yeah.
There's zero. I mean, the major investors, the the board gets information, but you have these retail investors getting zero information. So my recommendation would be what I'm advocating for public companies. Let's apply it to private companies that have over 100 shareholders. Can, at the very least, give a management report every 6 months, including KPIs, of how they're doing, and let these retail investors, get that information and use that to guide their investment decision. So public markets, we can refine it. The 6 months has merits and used overseas quite successfully. Bigger issue, private markets with information asymmetry at a level that was never seen in the public markets, and we have to get some kind of simple reporting.
Robert, that's a really interesting point to bring up. The idea that, okay, companies don't want to go public because public companies have so much more pressure on them. But if you're going to allow retail investors to start investing in the private markets, maybe a lot of that disclosure needs to come from them as well.
It has to, right? And you're not going to stop the retail investors. You report on it. It's the coming tide. We have to deal with it. You have to put some reporting.
You have all of these different exchanges that are allowing you to trade on these things, even if you're not directly invested in them. Those are some issues that probably is worth checking out, making sure that there is at least some disclosure that comes from the private markets too, particularly if everybody's going to play.
Right. And I'm not going to force them to be U.S. GAAP compliant with their disclosure, but they have to have some disclosure to these investors there.
And by the way, I just want to go back to this idea, the reporting every 6 months. I'm still not sure if I love that. And again, that is not what Jamie Dimon and Warren Buffett were advocating for. They were advocating for a longer term view on things, but they were kind of offering cover to companies at that point to say, stop giving financial guidance, like spoon feeding investors and analysts on this stuff and promising things that you don't have a lot of control over. They were offering cover to them at that point. They weren't saying that we should get less information as the public investors, though.
Yeah, that's a great point. And the interesting take there is there is no requirement to provide quarterly guidance. Jamie and Warren tried to give cover, but most companies who were giving quarterly guidance, continued to give that quarterly guidance. So one interesting take from this is, even if we changed it to 6 months, my bet would be you have a fair number of companies that have it built into their system today and still report on a quarterly basis. And that's what in Germany, new companies can report every 6 months, but what they call prime companies can report still have to report every quarter. So you could do a phase in there, but I think you'd still have a lot of companies who choose to give guidance. They're certainly still then going to give quarterly reports, even if it's not required. Guidance is not required. Companies voluntarily choose to do it, and you're always free to do the quarterly there. And I hear what you're saying. I personally like quarterly, but we're not at the tip of the spear. It's been experimented before. Leading up to this, I did a lot of reading, talked to a few people. They're happy with the 6 months, and I just want to top that off with, I'd rather, to me, if I can read something from management and understand their key performance indicators every 6 months, that would be wonderful.